All right, we made it. It's Monday. Half an hour away from the opening bell here in Hong Kong, in Shanghai, and in Shenzhen. You're watching the China Show. I'm David Ingles with Yvonne.
Our top stories this morning. Asian stocks open lower following data showing fresh signs of slack in China. We're talking about the credit data shrinking in April, while industrial prices extending that long losing streak.
President Biden is set to quadruple some tariffs on Chinese goods this week, with electric vehicles in the crosshairs.
Plus, a deep dive into China's AI development as we kick off an earnings week featuring the country's big internet names. Taking a look at when it comes to the market sentiment here this morning, we're pretty much flat when it comes to some of these Asian stocks, but we're mostly lower if you take a look at some of these benchmarks like in Japan and in Australia here today. It's kind of slow going in terms of news flow, but certainly we're still weighing on some of these signs that we're seeing in China, whether it's that weak and big miss on the credit data over the weekend. You still have CPI prices at least inching up a little bit, but PPI prices still very much in contraction. And then this threat of maybe 100% tariffs on Chinese EVs. That certainly sends us in a bit of a vulnerable position in terms of risk here this morning. U.S. futures are pretty much flat here right now. And of course, what really is going to be dominant later on this week is going to be that U.S. CPI report that happens on Wednesday. Is it going to fuel this recent rally that we've seen in bonds, or actually lead to its gloom? That certainly is one thing we're watching very closely. We're pretty much slow going when it comes to the U.S. Treasury curve here this morning, 485 for U.S. two-year yield. But we've seen such dramatic volatility really when it comes to these moves in the bond market of late. So this U.S. CPI print could be pretty telling as well. And we're watching very closely what goes on in some of these commodity markets. Iron ore is down about 1% here this morning. The dollar is slightly on the firmer side. We're getting close to 156 for dollar yen as well. What we've been tracking when it comes to China, so obviously we talked about the weaker data. You also have the threat of these quadruple tariffs now, according to what we've been hearing as well, that could be announced as early as, I think, believe tomorrow. So we'll see how that all plays out. But certainly when it comes to some of these ADRs on Friday, you saw that, one of the biggest drags was some of those Chinese EV makers, the NIOs, the BYDs, the like, that did overall drag as well. You take a look at how futures are set up here this morning for this China Open. It looks like we could be dealing with, of course, a little bit of a back foot here. So we're down about 0.4% right now. So weaker open that we're set for here today. 230 for the 10-year yield. There's been a lot of talk about these ultra long bonds, which we'll get to in a bit as well. And 723.62 for the currency here right now, Dave.
Yeah, the meeting on those ultra long bonds, we understand, will be taking place on Monday. So we're looking at about 140 billion, that's US dollars worth, of those bonds potentially hitting this market. All that being said, so we're looking at CGB yields, where they are and what pricing. We're looking around that, of course. EVs and solar, as Yvonne is pointing out, property stocks given in focus as well. Starting this week, of course, the stock-bound or stock connect flows. So we'll be operating with one data point less, if you will, as far as the daily numbers are concerned, northbound. An imminent bullish cross on, two key benchmarks, CSI and MSCI China. We're looking at a 50-day over the 100-day moving average, or 200-day moving average in that. And, of course, we are in the window as well here for the credit numbers to come through. Right. Speaking of data, so inflation out on the weekend, also credit numbers which came through, which arguably was the sort of bigger dip there. So left side of your screens, contraction in April, confluence of factors, seasonal and also cyclical weakness in government funding activities, consumer demand for mortgages on your right, and also corporate bond issuance were enough really to offset the efforts to extend loans from the banks. For more details on this, of course, let's bring in David Zhu, our Bloomberg economist, to talk us through this. So, David, let's talk about this drop in 200 billion. Is there anything beyond seasonal effects at play here?
Definitely. Usually, China registers slower growth in the credit in April because after the banks and other financial institutions rushing for extending credits in Q1. But this time, it's definitely overshoot the seasonality.
So what does this mean, right? I mean, are we starting to see where credit demand is basically slowing for households as well as corporations? And what can policymakers do to fix this problem now?
Well, I think they have done a lot of things. For example, the PBOC injected a lot of liquidity via the triple R card in Q1 and also encouraged banks to extend credit loans. And we also see some of the result. For example, if you look at the bank loans for this month, it was still okay. But on the other hand, we see that the market-oriented funding activities, such as bond issuance and the shadow banking activities, was very weak. So this told us that it was not the central bank's problem now, and the ball, I think, is in the government side because they need to take concrete actions to boost the confidence in the economy. Otherwise, they cannot see the strong demand.
Yeah, it's really demand, and it goes into the inflation report which came out, and just your thoughts on the inflation report.
Overall speaking, the data set was still soft or sluggish, because if you look at the CPI, you would think that, okay, the CPI picked up a bit, but it's just a small, very, very small pickup, a tiny pickup. And we have seen this several times over the past 12 months. And actually, for me, this tells nothing. And what I'm looking at is the PPI, because the PPI is more related to industrial profit. So that if you want to have a healthy economy, you must have the companies making money, right? Otherwise, it's not healthy. It's not sustainable.
There's been a lot of headlines about China having this meeting of when they're going to sell these ultra-long bonds as well. So is that going to help in any way the credit cycle? Maybe in May and June that we could see credit bounce back on the back of this issuance?
Yes, definitely. If you look at the credit data or the aggregated social financing, it definitely will help because that is one of the components in the basket. But on the other hand, we're going to see that this can help the investment side because it is funding for government investment. But on the other hand, the question comes to the very very beginning question is whether it can help boosting the confidence in the private sector. Well, I'm not so sure about that because the government has taken such policies or such actions several times over the past 2 years. But yeah, it helps, but not so much.
David Chu there, getting us warmed up here for the week out of Bloomberg Economics there. Now, to our other top story here, the Biden White House is set to significantly hike tariffs this week on some Chinese goods, nearly quadrupling duties on Chinese-made EVs. I'm just looking at my screens right now. BYD has indicated lower, as with XPeng. Let's bring in Stephen Engel. Here are the details for us. What do we know about what we might see this week, Steve?
Yeah, I mean, this has been telegraphed. This has been a review that's been going on for 2 years at the Biden administration. We've heard, Janet Yellen and a lot of other U.S. officials talk about the concerns about overcapacity and subsidies that go into these new green tech industries from China that do have overcapacity, and potentially they could dump them in export markets. The United States, though, keep in mind, it's such a small sliver, if even any, Chinese EVs in the U.S. market. They had previously a tariff of about 27.5%. But again, there wasn't a huge appetite for Chinese EVs. Yes, the price is very interesting because, a lot of these BYDs, or at least 2 or 3 of them, are right around 10,000 or below U.S. dollars per car, like the Seagull and the Dolphin and the like. But they're not getting into the U.S. market. So now the Biden administration backing up some of these claims about overcapacity and the concerns that has been echoed, of course, by Ursula von der Leyen, the president of the European Commission. They're raising it to 102.5%. It's an increase on the tariffs on EVs by the Biden administration of 272%. So that's nearly a quadrupling. We're also hearing from sources, and again, this has not been confirmed by the White House. As Yvonne said at the top of the show, that announcement could come as early as Tuesday in the United States, tomorrow. But there could be seeing a doubling or even a tripling of other target industries and products like batteries, like solar cells. Steel and aluminum have already been targeted, whether there's going to be an increase there. But again, these products are not imported into the United States in great volumes. So it does smack of election, November election positioning. Yeah. Because Donald Trump has been talking about even more tariffs.
And it seems like China is basically in the crosshairs of either presidential campaign here right now. What has Donald Trump said?
Well,
China tariffs.
he has mocked the Biden administration on many occasions. And again, he says, I would have done, or he should have done this 4 years ago. And if he said he was in charge right now, he would probably slap a 200% tariff on Chinese EVs. He also warned that China could use its manufacturing facilities in Mexico, and through the deal that he signed as president, the U.S., Mexico, Canada agreement, they could then export to the United States. Whether that would happen or not is yet to be seen. But again, he says 200% tariffs would be his choice, on top of the broad base across the board 60% tariff that he has proposed for all Chinese goods. So this is it smacks a lot of electioneering going on here. We'll have to see how it plays out over the next 6 months.
Yeah, Steve, thank you. Our chief North Asia correspondent, Stephen Ingles, there. And we'll hear more about the state of U.S.-China relations and China's overcapacity issues from Treasury Secretary Janet Yellen herself. She'll be speaking exclusively with Bloomberg TV and radio later on today on Monday, with those screen times right in front of you right now. We're checking one stock in particular, TSMC, just 11 minutes into the open, and there you go. You're seeing a pop in the shares of 2% or more. So April sales saw a jump of 60%. So it looks like this demand for AI chips is still very strong here right now. They also got a bit of a cash dividend as well. I think $4 Taiwan dollars is what came out of that, and that was JP Morgan is basically saying, yeah, it might get a boost in the shares and the pace of these dividend hikes that we're seeing.
Yep, what a setup ahead of NVIDIA next week, May 23. Mark your calendars there. TAIEX index up 0.7%, bucking the overall trend just ahead. And speaking of, nice setup as we go into this deep dive into AI and its impact in China as we kick off an earnings week featuring a lot of the big tech names in China. So we'll be joined by Kai-Fu Lee and also Jen Zhu Scott at those times about 18 or so minutes from now. Ahead of that, though, we're talking all things fixed income. Inflation's, of course, coming out of the U.S. We're up 2 straight weeks on U.S. Treasuries after being down in the 4 before that. Sonal Desai joins us next in a couple of minutes, counting down to the open of trade. Shanghai, Shenzhen, and here in Hong Kong, the first session of the week. You're watching The China Show. Good morning.
All right, we're just looking at some breaking news right now from the Bank of Japan. So they are going to be buying a smaller amount of bonds today than the prior operation. So that's according to what we're hearing. You're starting to see some of these bond futures are falling after this bond operation, and we are seeing a bit of movement in the yen here right now.
Yeah, we're stronger here on dollar, and quite a big move. In fact, when you look at the intraday moves, are giving us, again, something to, or reminding us of something that we need to be talking about as well. They did flag, of course, that there will be some flexibility, or at least they're maintaining the ability to be flexible around where they think rates should be, of course, in the 10-year yield as well. Going into, well, we were just talking about the BOJ meeting, right? June's live, really, when you look at this. Okay, we're also getting the renminbi fix of the day just out. I believe we're talking about that now as well. We're looking at, and by the way, just coming off a week where the dollar was actually on the way up. Reference rate, there we go, 7.1030 against the U.S. dollar. It really setting us up for quite a busy week.
Yeah, when you get the U.S. CPI print, that certainly is going to be the dominant sort of event risk here this week. And really, does it solidify this rally that we've seen across treasuries and the dramatic movements we've seen in yields? I think treasuries have gained basically 2 weeks now. Let's bring in Sonal Desai, Executive VP and CIO at Franklin Templeton Fixed Income. We'll get to the BOJ in a minute, but it is really about the CPI this week. Are we likely to see this disinflation trend finally come back in some way?
Well, I think mechanically, you're probably going to see a slight decline in year-on-year rates, but I think headline's still going to look like 0.4-ish. I think the market's probably right on that. Core is still going to look like 0.3. It's not going to be enough, importantly, for the Fed to have that critical amount of disinflation trend back in place. I just don't see that.
Outside of the U.S. story, though, it seems, for now, and changing, a fluid concept, that most central banks are probably going to cut within the next 6 months. Is that an assumption that we can confidently assume is going to happen?
Well, as long as you're not talking about the BOJ, of course.
Yeah.
So I'd say
that's a different story.
That is a different story.
Yeah.
And I think that, yes, the ECB, we're seeing divergence, essentially.
Right.
And so I think the ECB, absolutely. If I look at the BOJ instead, I think that markets probably coming around to the view that they're going to hike a couple of times this year over time. And I think the move we've seen this morning, it's just like a little bit of a flavor of what we're likely to see more of going forward. That depreciation of the yen is beginning to hurt Japanese consumers.
Right.
So you think that they probably have to hike in some ways to support the currency in some ways?
I think so, more to support domestic consumption, actually, more than anything else. I think it is becoming an issue. So, I mean, it's a rock and a hard place, right? They don't want to go too far too soon. But on the other hand, that yen is beginning to damage sentiment and domestic consumption.
Is it time to finally think about increasing duration?
In Japan?
Well, generally speaking.
Generally,
yeah.
I was going to say, well.
And you could also include Japan in there as well.
No, but I'd say more broadly, I think we're getting closer to the point, right? At around 4.5, that's roughly in the middle. Near term, we are getting closer to where the Fed, for example, starts cutting. Closer, but we're not there yet. And I think it's going to be a pretty shallow cutting cycle because ultimately, I think U.S. Treasuries are going to head higher just on the back of what's going on with the fiscal deficit in the U.S. When I say ultimately, I mean in a couple of years. We're going to go back up.
Right. And when you say shallow, what's the assumption there? How low do we go?
I think, look, we're at around 5.25. I think that neutral Fed funds nominally is at around 4 to 4.25. So, that's around 125 basis points of cuts. I mean, it sounds shocking, but prior to the global financial crisis, you can go all the way back to the 1950s. And the average, I mean, we survived with Fed funds substantially higher than what we've gotten used to over the last 15 years.
It's remarkable just how much movement we've seen across the short end of the curve. And, we've seen, 85 basis points increase in the two-year yield, basically from February to April. When you look back now, was that more of just a correction to you, or are we going back to the old underlying trends?
No, I think that was a correction. At the start of the year, markets were pricing in as many as 7 rate cuts. I mean, you do know this is the third year in a row that the first quarter markets get really excited, and dare I say the Fed gets really excited by the end of the previous year. That mission's accomplished, inflation's coming down, and then in Q1 comes the realization that yes, maybe, but nowhere near fast enough. And so I think it's just a correction to...
Right. Now, we could arguably not see yields at these levels, a generational opportunity, if you will, when you look at all-in yields, for example, across the board. Now, what I'm trying to get to is, if you're an income investor, where do I look? What are the best opportunities right now, if it's all in yields?
If it's all in yields, honestly, despite the spreads, I think high yield is actually quite attractive. At 7.83 or so, 7.8% all in. It is attractive, but you've got to be very careful. You've got to pick your pockets.
Right.
I'm not anticipating a massive slowdown, but the reality is many corporates did finance at lower rates, and they are going to have to refinance at substantially higher rates. So you have to be careful to find your opportunities. But the reality is, if I look at mortgages, you can get as much as 6% yield. These are very attractive levels to start considering re-entering fixed income from the sidelines, from cash and ultra short. Over the next quarter, 2 quarters, absolutely, we start moving back into duration.
Okay.
What about when it comes to tips? It seems like that's come through.
That's come back.
That's come back in some ways too.
And I think it probably will. I think inflation protection is here to stay for a while longer. There's no doubt about it.
What do you think about the CGB market? That's gone completely opposite way as far as yields go globally. The government's warned and said yields might be too low. Although when you look at inflation numbers in China, they're little to none. Where do you think value is right now in the CGB market?
So here we have to stop and just look. I think there is value there. We are going to see issuance. It is going to be quite attractive probably to look at that issuance. Right. But against that, you have to trade it off against the fact that you are looking at a slightly muddied growth outlook. I don't think Q1 is likely to be repeated. The property sector is still under some stress. And it doesn't matter what happens in November in terms of who comes in, we are going to see an escalation of trade tensions. So there are all these trade-offs, I'd say.
And very quickly, what are the implications of that if we do see tariffs come up? Just quickly.
So, very quickly, I'd just say that EV, it's a non-issue. Keep in mind it's 0.1%. China's market in the U.S. I think lithium batteries are where potentially there is something going on, but it's two ways. The U.S. depends on China for 70% of its lithium batteries. Solar panels, EVs, almost a non-issue. The U.S. is not a major market for China.
It's nice to see you have a great week ahead.
Yeah.
Thank you for gracing us with your presence in our studio. Sonal Desai there, Executive VP and CIO of Franklin Templeton Fixed Income. Right, going into the open, 8 minutes away. Futures should be pointing down. Last we checked, there we go, 0.3% ahead of the Monday open. 7 minutes away. Happy Monday. This is Bloomberg. Welcome back. Hang Seng Index, initial pricing, and also some of the big tech plays as well. It's a busy week in earnings here. We'll talk more about this and preview. Pick your spot, really, among these big companies reporting this week. In terms of the price action in the early goings, fairly consistent with the swing lower across most parts of the Asia Pacific. Although that said, this is simply mathematics here, which might mean MSCI China and also CSI 300 on your screens might see the first golden cross going back to early of last year. That's a bullish signal, of course, if you do some trend following. Watch us closely next few days. Sir.
Yeah, whether they can actually catch up to this Hong Kong rally we've seen of late. Certainly, we're watching analyst actions for you today. There's a bit when it comes to the property space here this morning. China Resources Land rated new buy at Suzhou Securities. Sinopec A shares cut to neutral at CCB. And we got Costco Shipping as well. A shares raised to a buy at Jefferies with a price target of just under $15 here this morning. In terms of stocks to watch, so we're watching everything from EVs, some of these solar stocks as well, on what we've been hearing so far from multiple reports and our sources as well, that we could be seeing 100% tariffs when it comes to some of these Chinese EVs. There were some exclusions when it comes to some of these solar companies as well, but certainly that's one to watch. Yeah, you pair that with Zeekr, which had a great day in the U.S. on Friday, so there's a bit of a dichotomy there. But you're looking very closely at these biotech stocks here today. So the U.S. introduced a revised version of a bill aimed at blocking biotech companies from abroad. So there's an 8-year grace period now, and analysts are saying that's enough time for them to find a way out, the likes of WuXi Bio and the like.
There we go. Those stocks are up. The open is next. This is Bloomberg.
You're watching the China Show. Happy Monday. We're kind of down the open of markets. There's still a lot of things to really digest here this morning. So yes, that big miss on the credit data where we see a rare contraction when it comes to aggregate financing, the like. That brings us back, if you go back to some of these old data sets, as bad as what we saw back in 2005. So there is that weak data to contend with. On the flip side, though, inflation's coming back a little bit in China as well. So how are traders looking at this here this morning? It seems like we're still slightly in the back foot when it comes to the Hang Seng pre-market. Futures are still pointing lower here this morning, Dave. And yeah, we'll see if we continue this rally in Hong Kong this week.
Yeah, so I think the Hong Kong stalled last week as a, outperformer compared to the S&P. It's the mainland markets which have started to relatively wake up.
Yeah.
Later to the game, later to the game compared to offshore China. I think we're up 4 straight weeks. There we go, bottom of your screens there. So weakness coming through. And to Yvonne's point, just away from equity markets, just very briefly, while you look at some of the gains you're seeing in the CGB market, of course, based on our reporting as well, ultra-long bond yields, we understand, of course, they're meeting with some of the dealers right now to just gauge, of course, $140 billion. That's U.S. dollars. So just to get a sense of demand on the back of the inflation print, change the boards, please, which came out over the weekend. CLP bottom of your screens out with earnings today. Curtain raiser for all the big earnings coming through out of Hong Kong this week. The biggest of the biggest Chinese tech companies are reporting this week. More on that in a moment. Weakness coming through across those. And speaking of some of the weakness, 10 cent there on your screens. Okay, geopolitics. We're talking things like EVs, for example. And perhaps out of the White House this week, set to quadruple the existing tariff regime imposed on some of these names, for example. So BYD, XPeng on your screens, 5%, already the drag from Friday, and some of the solar names as well here on your screen. So we'll continue to track what happens here, plus, of course, some of the other stocks which we followed earlier on Wuxi, for example, on the back of that new draft legislation. But I guess we can talk about that later. Let's talk tech, Yvonne. Why not?
Yeah, a bit of relief in some of these biotech stocks. We'll check in a bit here. Of course, we talked about the tech earnings this week, right? So traders will be eyeing really what goes on when it comes to the likes of Tencent, Baidu, to publish their earnings, and then their AI progress will be closely watched as well. Baidu, of course, was one of the first to win approval for its AI services from Chinese regulators, and it boasts a chatbot similar to OpenAI's ChatGPT called, you may know it, Ernie Bot. Now, it says that service has attracted over 200 million users since it was released last year. Chinese media say regulators have approved more than 40 AI models since the process began last August. Among them is the likes of SenseTime, which says its latest Gen AI model focuses on mathematics and coding, while startups such as Zhipu and Moonshot AI have attracted millions of dollars of backing from the likes of Tencent and Alibaba. I think our very own Robert Lee was saying Moonshot AI actually has been superseding the likes of Ernie Bot these days. Yeah. And of course, Bloomberg Intelligence also thinks Beijing will need to redouble its AI development efforts in the face of an apparent widening tech gap with the U.S. You have tightening export restrictions on NVIDIA chips are also expected to hamper China's research efforts.
Yeah, let's discuss all of this, where we are in the story on the back of earnings coming through, the trends to watch these next few months or so. Joining us here on set is Jen Zhu Scott, In Capital founding partner, and also with us is Sinovation Ventures Chairman Kai-Fu Lee, whose startup, of course, is launching, and we'll talk more about this, Kai-Fu Lee, in a moment, the first AI application for consumers. Thank you for gracing us with your presence, both of you. Let's start with you, Jen Zhu Scott, looking at, or should I call you Gen AI? Maybe I can do that. This week, a lot of big earnings coming through.
Yes.
What are you most curious to see from these big tech giants?
David, Yvonne, great to be back. Thank you very much for having me. Right now, both in the U.S. and China ecosystem, the AI space is racing at a breathtaking speed. In terms of the U.S., of course, in the infrastructure side, in terms of semiconductor and also a large model as in software infrastructure, China's is still playing catch up a little bit.
Okay.
And but in terms of application, China's speed is second to none. So I don't want to steal Kai-Fu's thunder, but I think today probably the race changed a little bit in terms of performance. A lot of those earnings impact actually going to come down to, including NVIDIA, I know, David, is one of your favorite topics, is going to be impacted by how efficient those models are going to be, how well performed they're going to be, and how much data processing they require. So I think not only just in the past few months, we have witnessed all the big tech, both in U.S. and China ecosystem, issue a lot of their own models, but also we'll start to see this competition of efficiency starts as well.
Kai-Fu, yeah, as Jen just mentioned, maybe the game has changed a little bit with now
Today.
Your new model. Tell us a little bit about Wang Zhi. Is this really China's answer to ChatGPT? And why do you think some of the other previous sort of ones that we've seen, chatbots in China, have not been good enough?
Right. So we are launching today our new model called E-Large, which is the model that has API being released throughout the world. We intend to be a global company, so not just for China, but for China, we've developed an app on top of E-Large. So E-Large is to GPT-4 as Wanzhi is to ChatGPT. We now have both. 01.AI, my company, was founded only 1 year ago. And when we started, we were at least 7-8 years behind the OpenAI. But now I'm proud to say that our latest model, E-Large, is performing comparably with GPT-4 by third-party evaluations. And on top of a powerful model is really the only way to support a product with product market fit that will excite users, bring about the ChatGPT moment. So we are hopeful that our model, with its performance, will provide a chatbot that will rival ChatGPT for China. But we also think the model will support all kinds of apps throughout the world.
it looks like we are bracing for just explosive growth at least this next year. So Kai-Fu Lee and Jen, I want to get your thoughts on this. But Kai-Fu, let me just get your thoughts on this first. You mentioned it, Kai-Fu Lee, barely 12 months old, and you're in the market. This applies to other players in this market too. The fact that barriers to entry are low, which perhaps is a good thing. How do you expect competition to change these next 12 months or so? Should we expect more competition? And how are you looking to innovate your product ahead of perhaps competition coming in? Kai-Fu.
Right. I actually don't think barriers are low. You don't see these great models and ChatGPT-like products and everywhere in the world. There may be half a dozen companies that are in a similar situation in US, China, perhaps France and other countries. So we are one of the few, and certainly the Chinese companies have achieved this level of performance at breakneck speed. And that is the essence of Chinese entrepreneurship. Is first, we don't have as many GPUs, so we need to figure out how to use them efficiently. So for example, at 01.ai, we train our models at 1/2 or 1/3 the cost of comparable companies, because we don't have access to the latest GPUs. And also we have many, many, many fewer of them compared to OpenAI. And despite these challenges, we've reached GPU-4 performance. So we're quite proud of that. I think many of our Chinese peers have also done quite well. So I think a lot of the saying in media that China is way behind is not accurate. Now, that said, companies like Meta, Google, Microsoft are putting 50, 100 times more resources in this. So we certainly don't take it lightly. So as we catch up with the currently best model, we realize that even better models will come from OpenAI and others. And we want to stay as close as we can. But we also think it's about building a great user experience. It's really understanding what the users want and using that, which is China's advantage, as Jen said earlier. If you think about Chinese applications, TikTok is better than Instagram. Products like Temu and Shein have taken over the world. Users love it. I think China's ability to develop great applications that focus on what users want and that product market fit is a unique attribute to Chinese companies.
Kai-Fu, you mentioned about GPUs. I was going to ask you, it seems like you guys have been basically loading up on these NVIDIA chips. You foresaw that this was going to come. I think we spoke to you back in November saying you may have maybe a year and a half worth of supply left. What do you think is going to happen after that? Do you think that, basically generative AI is going to be for those with a deep pocket? You have to keep, shelling out dollars for this? Or do you think that there's going to be these smaller sort of newer business models that can actually evolve to give smaller startups here more access to these compute resources?
Well, I think there are two questions here. One is accessibility to GPUs. We're in fine shape right now. We raised a lot of money, but it's a tiny percentage of what the top American companies have. So we're really more bounded, not so much by what we can buy, but how much money we have. So we have to be extremely parsimonious and practical and really build the right models with the right size that fit the user's needs. Now, one could certainly train with the resources that Google and Microsoft and Meta have, train a 50 trillion parameter model. But such a model will not run for everyday applications. Everyday applications require minimal latency, these very good accuracy, and different applications require models of different sizes. So today we're also releasing a whole series of models from 6B to 9B to 34B to E large, which is over 100B. And for every application, we've demonstrated that we have a model size that performs as well as, if not better than, the competition. So I think that demonstrates for real practical use, we at 01.ai are able to compete on a global basis. Now, there could be a huge model that one of the top American companies developed that performs better. but it still remains to be seen whether such a huge model with the corresponding required large amount of compute resource can be deployed in real applications that delivers return on investment and has a reasonable infrastructure cost and latency for the user.
Jen, your reaction to Kai-Fu Lee opened up many doors there. Just go ahead.
First of all, I'd like to congratulate Kai-Fu and his team for making such meaningful effort to trailblaze China's software side of infrastructure. But also I want to just briefly depart from this US-China framework for a little bit. What we're talking about is the community where it's very GPU rich and the community GPU poor, either because you are open source community or you're because of geopolitical issues, you're starved from GPU, the most advanced GPU supplies. The world actually, vast majority of people in the tech industry, not only just in the US-China framework, in the global community, vast majority of players don't have a lot of GPUs like, OpenAI, etc. So I see this actually an opportunity in terms of where AI should go. Because if you think about the large model right now, because most of the large models is still kind of black box, we don't really know which set of data really made a difference in terms of the algorithm to understand and make sense. Therefore, one of the easier, lazier way to approach this is to add more and more data, use more and more GPU. But if you think about human brain, we are talking about the biggest model in the world is OpenAI ChatGPT-4. It's rumored more than 1 trillion parameters. But our human brain consumes 30 watts, and we're processing 100 trillion parameters. So there's no comparison. I have always said this, you don't get to Mars by building taller and taller building on Earth. So by building bigger and bigger model, consuming more and more GPU is not really the way to get truly flexible AI. So I actually think what Kai-Fu's team, a lot of companies and developers, their pursuit to more efficient and smaller model is the future. Microsoft just issued a Phi 3 as well, using 7 billion parameters to actually outperform much larger models, OpenAI.
Yeah, you mentioned this emergence of smaller language model. And what implications is that going to have for these GPU companies, whether it's their share price and this whole race right now?
I wrote on my LinkedIn a while ago, when NVIDIA's price is like highest, I actually did not believe the price will stay that high because precisely for the reason I mentioned. But also, if you take a look at the what's happening in the global tech scene, right? I think people realizing, in social media age, when you thought you were sharing your information, pictures to your friends and family, you're actually sharing with Mark Zuckerberg. But now people are realizing your most intimate questions you're asking GPT is actually not private conversation. You chat with a private owned commercial company, OpenAI, run by Sam Altman. That's kind of creepier, I think. So I think what's going to happen because of this combination of geopolitical situation, GPU distribution, I think this kind of smaller model, localized AI, local agent is going to happen. A couple of trends need to notice here. As we have already well addressed in that in China, GPU is becoming a resource that's very difficult to access. However, if you take a look at China's smartphone like, for example, OnePlus 12 is selling 24G and 1 terabyte phone at $900. And China's EV market is developing so fast, right? It took China 27 years to produce the first 10 million EVs, but it only took 17 months to produce past the 20 million mark. So all these EVs, they are tablets on wheels. So what's happened is that all these very, very powerful individual applications, they will have the capability to hold their own data locally, process locally. Of course, there's a trade-off in terms of efficiency and performance, but eventually I think those kind of alternative, as opposed to very centralized approach like OpenAI, will start to flourish. It will become much more popular outside of the US system.
Kai-Fu, can I bring you in on that? Just your thoughts on the trends around efficiency that you think we should be paying attention to, not just this year, but in the years to come.
Yeah, certainly. I think the we're currently very fixated on the training market, which is how to take a whole world's data and train giant models. And for that, you do need a giant cluster, and currently NVIDIA is the best solution. But as Jen said, inference is a very different story. When you actually deploy these models, bigger is not necessarily better. You want to be able to look at the app that you're building. If you're building something with deep reasoning skills, that generates great content, you do need a large model. But for a chatbot, customer service, and games, you do not. So there needs to be a model for every occasion. And that's why 01.ai, we've deployed models of different sizes, and the APIs are being made available globally at very competitive prices. I think what's important, an indicator important to watch, is really the cost of inference. I think that is the gating factor. Assuming people always find good enough technology for each application use, it's all about writing down the cost of inference. We see inference costs dropping about 10 times a year. So that means things that seem impractical today will be widespread in 1 year, at most in 2 years. So I think a proliferation of GPUs, models, and agents and applications that run on all different sizes, I think will be the key to the next phase of development of LLMs.
Jen, when does safety come in? When should safety come in? Conversations around safety.
Yesterday. I think the problem with safety right now is actually not so much a lack of discussion, but it's a lack of understanding with the discussion. There's a lot of distraction in terms of inflating what AI can do, and therefore actually distract what needs to happen. My personal belief, I'm a huge proponent of open source and keep localized and have distributed approach instead of centralized approach, which is that all the large tech is doing right now. And end of the day, when it comes to safety, everybody have very different and very nuanced approach, right? We all see our privacy in a very different way. So leaving to a handful, few companies, or even for regulators to decide every single aspect of what individuals should use or access and express and interact with AI is limited. So therefore, I think the more we have open source approach, localized approach, distributed approach, combined with regulation and combined with this kind of leadership with value and the concern of the society from the large companies is probably the recipe, the best recipe you can have right now.
Yeah, and Kai-Fu, maybe to give you the last word here, there's this potential for AI to create havoc on the world. I mean, what's the counter argument to that for those that are concerned that AI may be an existential threat?
Well, one concern is that AI will take over the world like Terminator. I would say that's completely unjustified. AI is a tool that we use. Now, I do agree that AI is very, very powerful and can be used by the bad guys that will bring about very serious harm, for example, for terrorist groups and things like that. So it's important to put all the checks and balances in place and safety measures. I would point out that every great technology always came with big risk. Electricity brought about risk of electrocution. People invented circuit breakers. Internet on PC brought about viruses. People invented antivirus software. So that I would say now is to call to duty for all the people working on LLMs to not just focus on bigger, better model, but having a renewed focus on safety. Right. And I also believe open source is important, and we are open sourcing everything except our biggest model today as well.
Kai-Fu, it's great to have you. Kai-Fu Lee there, 01.ai CEO and Sonal Ventures Chairman, and Jen Zhu Scott, of course, founding capital of In Capital. I remember Kai-Fu mentioned back in NEF last year, Dave, our jobs are still okay for a few more years, maybe? Plenty more ahead. This is Bloomberg.
Okay, a couple of stocks that are rising quite, I was about to say substantially, but live TV folks and live markets, still rising nonetheless amidst what's really a downdraft across equity markets. So Chinese biotech stocks, some on your screens as well, on the up. This new draft, new information around this biosecure bill, which might allow, and this is according to the folks at Morgan Stanley that this 8-year grace period, the deadline of the decoupling is 2032, might actually allow the Wuxi family of companies, in their words here, to find a way out with a soft landing. So perhaps positive news for the stock today. We'll see, of course, what this holds, of course, moving forward.
So a bit of a relief there for some of these companies. Some other stories that we're tracking for you today. China's securities watchdog says it is investigating hedge fund Zhejiang Ruifengda Asset Management for suspected illegal activities. Media reports say the fund failed to pay investors seeking redemptions, and its controlling shareholder is missing. Economic crime investigators in Shanghai have reportedly sealed off the company's office in the city. ANZ Group has revealed that Australian regulators are investigating its execution of a government bond sale last year. The inquiry relates to the issuance of 10-year Treasury bonds by the Australian Office of Financial Management, or AOFM. ANZ was appointed by the AOFM to act as a risk manager in relation to the issuance of the debt. The bank says it is cooperating fully with the investigation. In France, as Amazon, Pfizer, and Morgan Stanley are among the companies poised to boost their presence in the country, expects a flurry of new foreign investments to be unveiled Monday, will top last year's $14 billion. President Emmanuel Macron is hosting 180 CEOs and executives this week in a push to reindustrialize France and make it a financial hub for the post-Brexit EU. And we will be speaking exclusively later to the French President Emmanuel Macron about trade, geopolitics, and, of course, international investment. That's 1 a.m. Tuesday if you're still up in Hong Kong. This is Bloomberg.
Yep, just very quickly looking at markets right now. So about 24 minutes into the session here, similar declines we're seeing across Hong Kong and China, 0.6%. In terms of market breadth, I'd also say largely almost a mirror image of what you're seeing. So CSI 300 down 6, 210 stocks are down on that benchmark. HSI, about 60 stocks are down. So that I would say about 65 to 75% of constituents are down, going into a fairly important week as far as not just data. So data points in China, most important would be back end of the week on Friday, but a lot of earnings coming through to justify this rally. We'll see what happens with this, of course. And just ahead, of course, a lot of key milestones to tell you about.
Yeah, so obviously we've talked about the tech earnings and the like here. Vasu Menon from OCBC joining us in the next hour, talk us through markets and what's in store this week as well. This is Bloomberg. Welcome back to watching the China Show. Hour 2 here right now. We're looking at how some of these CSI 300s and these benchmarks are doing here right now. We're slightly still on the back foot here when it comes to the onshore market. MSCI China is also down just slightly. So, there's a lot to contend with, whether it was the weak credit data that we got, which was a bit of a shock just given the rare contraction that we saw in April, Dave, but also this threat of, more tariffs, or at least 100% tariffs on Chinese EVs. That certainly is weighing on sentiment here this morning, too. Yeah, just the lack of underlying activity. I'm just looking at a live shot that you just showed our viewers there. It's just me, or there's just not a lot of traffic there in Lujiazui, which is a financial district. Anyway, that's anecdotal. That's literally one block in terms of the sample size. Okay, we're looking at some of biotechs. Some are up. As you can see on your screens, this new draft giving maybe slightly more encouraging information. 2032, that's perhaps more long enough window for some of these companies then to adjust their sort of revenue exposure, leading to some, of course, Morgan Stanley came out with that note, fairly positive as far as what this might mean for this group of stocks is concerned. So that's this story for now. On the weekend, Yvonne was pointing out, of course, the credit numbers which came through, right? So it's rare that you actually see a contraction there. Confluence of factors, seasonal, you had a big spike in March and then April, and also cyclical as far as the economy is concerned. Plus, of course, you're also getting some data around developers, for example. So Long4, I believe, came out with contracted sales as well. We have Long4 in here? No, we don't have Long4 in here. Okay, interestingly enough. But in case you're wondering, bottom of your kids for Long4. Right. Asia ex-China, so fairly consistent with the move we're seeing in Chinese markets anyway, is this downdraft across equities right now. So we're treading water. It's a big week ahead. It's early, I should also note as well. So volumes are on the lighter side of things. We're coming off quite a bit of a run as far as Chinese equities go. Hong Kong maybe last week started consolidating. Onshore, we're up for 4 straight weeks.
And then we're going into this week with a lot of big earnings coming through and a lot of sort of macro events in the Asia Pacific, right? Plus you have U.S. inflation coming through midweek. Just keep that in mind. U.S. 10-year yield bottom of your screen is 4.5% as far as that's concerned. And of course, we talked about what's been taking place. We have dollar yen in here somewhere. Here we go. Stronger, 155.83. And some news earlier on, about an hour back, that Japan is not buying as much, or BOJ is not buying as much bonds, really sending dollar yen lower to these current levels. I believe we have JGBs on your screens. We should be having that. If we don't, anyway, okay. In that case, Yvonne, I'll send it back to you.
All right.
Yeah.
We'll get that board coming up a little bit later on. But we're taking a look at what's happening this week. It is a pretty busy week as well, right? So U.S. CPI, that turns to be certainly the big event that's going to be happening on Wednesday. So whether this can actually solidify or actually put a drag on this Treasury rally is certainly one thing we're watching out for. When it comes to the credit data out of China, obviously we're going to get any indications of policy and that one-year MLF rate on Wednesday as well. Does it kind of change the equation a bit? Economists are still thinking no change on that front, but certainly when it comes to what it comes out, there's activity data on Friday from China, so everything from retail sales, alike, home prices, that's all coming through here as well. So certainly there's a lot. I forgot about the Aussie budget that's happening tomorrow as well, Dave.
Okay, yeah. So the simple question is, do stocks go up or down? with all that in front of us, Vasu Menon may be here to help us answer that question. He's MD. Investment strategy at OCBC Bank. Vasu, good morning. Happy Monday morning. Thanks for joining us and hope you had a restful weekend.
Good morning.
What's your sense of equity markets at this point? We're not doing anything currently. Is the risk to the up or down?
Well, I think the markets are going to tread water, at least in the short term, until we get some clarity of, where the inflation outlook in the U.S. is headed, where Fed policy is headed, when the Fed is going to pivot. I think those things are playing out. You got some data that indicates that the U.S. economy is softening, inflation potentially soften further. The Fed could pivot in the second half of this year. So that's giving, investors hope. It's really a tug of war between hope and fear. And what that means for the markets is that it's going to create some volatility in the markets. Markets will tread water, but if you take a medium-term view, we are still positive in the markets because we think it's a matter of time before the Fed cuts rates. We're not negative for the U.S. economy. We think earnings will still come through. There's an abundance of liquidity on the sidelines. As rates are cut, that liquidity will make its way into the markets. So short-term, yes, things are looking a little iffy, but medium-term, we're not negative.
It's interesting just the volatility we've seen, right? If you take a look at the 2-year Treasury yield, which basically has swung 30-some basis points over just comments from Jay Powell. I take a look at dollar yen and the swings that we're seeing. First we were sub 150, now we briefly touched 160 at one point. I mean, what does this volatility tell you, Vasu? Are we underpricing sort of the tail risk still in this market?
Well, no doubt. I mean, the markets are, essentially the volatility does indicate that, there are tail risks. And investors should not be complacent. But nevertheless, I think, short term, there are risks, but medium term, we think that, the outlook is still sanguine. And we think there's still a case for investors to stay positive in the medium term and perhaps adopt a dollar cost averaging approach. And so there's still a case for investing in the markets and to stay invested. So we are definitely not negative on the markets. We see risks, but we're not negative.
Maybe more specific on equity market exposure at this point in time. Several markets have done well, China for one. Several markets before China did well, like the U.S. has done exceptionally well. What type of exposure do I want, given all the earnings coming through this week? And NVIDIA, Vasu, is coming out middle of next week.
Well, we are not negative on, technology stocks, AI stocks. They've done very well. Just like the broader market, they're going to run into volatility from time to time, patches of volatility. But AI is really at the cusp, infancy, and it's going to be a 10-year story. So investors, should not turn negative on technology. It's here to stay. It's going to revolutionize our lives, revolutionize businesses. It's only just beginning. But of course, along the way, you'll have hits and misses as far as earnings are concerned, and that's going to create some volatility in the markets. Now, as far as Chinese equities are concerned, yes, they've done well. They've been on a winning streak for 4 to 5 weeks, I believe. And we're not negative on China. We are neutral on China. We've got a positive watch on China. And the Chinese government has been doing some things right. They've been, undertaking stimulus. China has underperformed, so you're seeing some rotational interest in China. But the weekend announcement or the weekend news that, you could see tariffs on Chinese sectors like EV and, others in China clearly highlights that in an election year in the US, Chinese equities do pose some degree of short-term risk.
What do you make of just the macro picture, too? I mean, obviously this, what we saw in the credit numbers was pretty disappointing for April. PPI still under a long streak of contraction, and then CPI, though, still doing a little bit better, but we're still close to zero here right now. I mean, does that change anything for you, Vasu?
Well, it doesn't change a lot. China's expectations as far as China is concerned is very, very low right now. Foreign ownership of Chinese stocks is very low as well at this juncture. Retail participation is also fairly low. And valuations are low as well. So, the Chinese equity market is very under-owned. And some of those factors you highlighted earlier have been there in the background. The latest, of course, being the credit data, but that could be seasonal. But then again, it is just a small part of a wider equation. And I think we need the property market to stabilize in China. We need to see more stimulus out of China. We need to see the Chinese government put some kind of backstop on the property market and the economy. But we're not negative on China. We still see China growing at, between 5 and 5.5%. And we think that at some stage, there'll be a stronger case for investors to have greater conviction that Chinese equities can hit higher. But right now, it's had a good run. May take a breather, but with the election year in the U.S., one has to be a bit more careful.
Okay. Vasu, thank you so much for kicking off the week with us. Vasu Menon, the Managing Director, Investment Strategy at OCBC Bank. Still ahead, China investigates a local hedge fund for suspected illegal activities, while media reports say the fund's controlling shareholder is missing. This is Bloomberg.
Right, welcome back to shows. Price is on the down here across these equity markets. I'm looking at my Bloomberg terminal and I'm looking for data here. So southbound flows at this point in time. So we're getting some positive flows into Hong Kong. I'm looking at northbound. Oh, I don't have any northbound flows on my screens. That's probably because of this next story. China's halting the publication of live stocks connected on a minute-to-minute basis. I believe they're still publishing it end of the day. To clarify that for us, Shangmi Cha is with us here on set, Asia Stocks reporter. So what is happening today and what can we expect?
Yeah, in fact, it's already implemented, apparently. It's terminated. So Shanghai and Shenzhen exchanges, they have decided to entirely scrap this whole real-time data release of how the foreign funds are purchasing or selling the local stocks. And this has been watched very closely from especially the retailers in the local market, because they trade on this sentiment, right? So the foreign funds, they look at how there's a rally and then they would all come in, but then there were multiple of these sell-offs in the past. And so a lot of the retailers have been saying, hey, why don't we obscure that data? And so that's what the authorities said just now. And so we're not seeing that inflows, that flows anymore. Instead, it's going to be turned into intraday, more of like one-day kind of flows data.
The end of the
day, exactly. And then so we will be seeing that a lot of the analysts say it doesn't really affect the value investors, because the intraday moves are more of a noise for them. But it is still going to be a difference there. So we'll be watching how they'll be releasing it.
Just to clarify as well, right? So this is in line with what they do anyway outside of China, right?
That's true. That's what the authorities are saying. But again, that is in line. So other parts of the world, they do this exactly. They don't have the real-time data of the sell-offs and the flows, and the buyings, right? but still, it's just different in the sense that, yeah.
We were just talking about how our previous guests, how markets are sort of treading water in China here as well. I mean, is there a sense that there's just a bit of consolidation going on after this rally, or do you think the news of the weak credit data, threat of Chinese EV tariffs, is that really what's weighing on things right now?
Right. We had multiple of these optimistic catalysts as well, but at the same time, we've been seeing some of those bad news over the weekend as well. Last Friday, especially, we've seen that tariff woes from Biden, coming in. So we're watching closely the solar cells makers, the EV makers, the battery makers as well. But it's just overall, we're seeing the shares are down everywhere else other than Taiwan and TSMC. And so, of course, just like you said, the numbers in the credit woes are just like hitting back, and also the property. We'll have to watch for whether there will be more of those catalysts coming from the local governments in China, whether they're going to continue to really, continue to scrap these home buying curbs that they have in place. And so more of these catalysts need to be seen to actually see. And of course, this week we're going to be watching carefully the tech earnings of Tencent and Baba.
Sangmi, thank you, Sangmi Cha there, our Asia stocks reporter. We just got some breaking news that's crossing the terminal here right now. So China is said to be planning its first ultra-long central debt sale on Friday. So this is according to people familiar with the matter, as it tries to seek to raise funds to support the economy here right now. And just given the backdrop that we saw with that credit data on April, they're going to need this, a little bit more issuance now.
Yeah, because the lack of government financing was one of the components which led to that contraction in the overall figure. And to Sangmi's earlier point, we'll need to wait and see more support measures, and this probably could be one of them. Just breaking that down, 138 billion. So, okay, let's state this in local currency terms. 1 trillion renminbi. So the total issuance based on the people that Bloomberg was able to speak with is 300 billion will be in 20-year bonds, 600 will be in 30-year, and 100 billion will be in 50-year tenor. There we go. So these are ultra-long bonds. They'll be sold from May through November, and as Yvonne is pointing out, they'll begin that sale of the first batch on Friday, towards the end of this week, which, interestingly enough, is when they release the activity numbers for China.
The FT kind of had a bit of a report here on whether they were looking for, the PBOC asking brokers for advice on how to price these bonds. So certainly there was indication that this was going to be happening pretty soon, and maybe we'll get a little bit more details on the pricing side of things as well. Get to another story that we're tracking right now in the hedge fund industry, though. It's pretty interesting. Yeah,
so the securities watchdog is actually investigating this hedge fund, Zhejiang Weifangda Asset Management, for suspected illegal activities. Claire Valentine is here with us and set to talk us through what we know so far and how this fits into the sort of regulatory action we've seen out of authorities recently.
Yeah, so very much still a developing story. What we know so far is that China's security watchdog is investigating this hedge fund for suspected illegal activities. There have been some local news reports that have said the fund has failed to pay investors seeking redemptions and that the controlling shareholder is missing. Very interesting, still a developing story, but this is sort of in the background of China cracking down on hedge funds, imposing stricter rules. So sort of see how this plays out, but it very much is in fitting with that theme.
Yeah, and I mean, obviously, we've been tracking this rally that we're seeing in the mainland. What are you talking to people about? What's driving this rally? What are some of the headwinds still?
Definitely some of the things driving the rally, I think, are some optimism around policy support from Beijing. That's been a huge aspect of it. We've also seen tech doing really well. We're going to see tech earnings this week and see if that can continue the rally. In terms of headwinds, there are quite a few that are piling up. We're seeing some potential tariffs from Biden coming in. It's an election year, so that's always really volatile. And then there's this sort of fear of missing out that's been driving the rally. That could sort of be fading. Potentially, it's been pretty a significant rally this year, so there's always a chance it gets a bit overheated. But I think tech earnings this week are really going to be a pivotal point.
Absolutely. As really that is one part of this equity market where you're seeing projections really come alive. Apart from that, it's hard to also see any clarity on sector dispersion. There we go, Claire. Fantastic. Thank you so much for an update there, Claire Ballantyne. Okay, plenty more ahead here in shows. Lots of big movers. Plus, we'll unpack this breaking news story on the CGB market. Ultra-long bonds coming your way, and coming your way very soon. A lot of them. This is Bloomberg.
Let's talk about Zeekr now. The shares of the Chinese electric car brand gained 35% on its debut in New York on Friday, and that really followed an expanded IPO, the biggest U.S. listing by a China-based company since 2021. The CFO, Yvonne, told us more about the timing of the IPO amid heightened trade tensions between Beijing and Washington.
We at Zeekr never try to time the market or chase the latest trends. I mean, we follow our own strategies. If you think about overall, say for example, overall Chinese EV market, if you read the numbers in the first half of April, in China, the passenger vehicle market records a new energy vehicle penetration rate of more than 50%. If you look at my pipeline, I've introduced my own new 111 in February this year, and earlier this year, in 1st of January, started delivering my own new 77. So my pipeline is also very strong. And if you think about my international expansion strategy, we've been starting selling cars to international markets since last October. And in this year, we're going to sell more cars. So we need this kind of transparency brought by a U.S. listing. All in all, we do think it's a good time. We're not considering about short-time headwinds. We think in long term and trying to make sure that in the long run we make a very, very good business case.
Well, sir, as you talk about how you're expanding to international markets, considering the existing tariffs in place in the United States, the country in which, as of today, you are now listed, and potential that tariffs go even higher, are you now listed in a market that you may never actually be able to enter and be competitive in because of those tariffs?
Yeah, so we are not entering this market, or we are not just listed in the U.S. because we want to enter into U.S. market. We get listed in the U.S. as mentioned earlier. We're thinking about all the transparencies being the U.S. listed public company, all those securities that I receive, and the comfortable I can provide to global regulators that I am a transparent and basically very good global corporate citizen. We think that is actually more important.
Mr. Yuan, the reality check seems to come in your prospectus here as Zeekr warns investors that the Chinese government could, in fact, intervene in its business to further its own regulatory, political, and societal goals. Sir, why would a U.S. citizen ever invest in a Chinese company right now?
Yeah, so I was thinking about, if you look at the U.S. capital market, it's continued to be a very big, transparent, and probably the most liquid capital market in this world. So being a foreign issuer, we want to see if we can tap this type of markets, and we want to see, we have access to capital at time of need. Again, it's more about my strategy. It's more about long-term view rather than short-term headwinds.
There we go. Jingyuan, Zeekr CFO, speaking with our colleagues, of course, Kaylee Lyons and Joe Matthew there when they debuted going into the weekend. Right, some other corporate stories that we're tracking and we're following this Monday. This is a big one. So ANZ's down 3%, as you can see, bottom of your screens, has revealed that Australian regulators are investigating its execution of a government bond sale that's last year. Now, the inquiry relates to the issuance of 10-year Treasury bonds by the Australian Office of Financial Management, or AOFM, or Australia in short. Now, ANZ was appointed by the AOFM to act as a risk manager in relation to the issuance of the debt. Now, the bank says it is cooperating fully with this ongoing investigation. Right. South Korea is preparing to invest more than $7.3 billion to strengthen its semiconductor industry. The finance minister says the program could include financing from state-owned Korea Development Bank. The move comes, says the U.S. presses allies to further tighten restrictions on China's access to chip technology. Now, France says Amazon, Pfizer, and Morgan Stanley are among the companies poised to boost their presence in the country. It expects a flurry of new investments to be unveiled. That's on Monday. Will top last year's $14 billion figure. President Emmanuel Macron is hosting 180 CEOs and executives this week in a push to industrialize France and make it a financial hub for the post-Brexit EU.
Yep, and we're speaking to the president, of course, as well. Take a look at when it comes to markets here today. We're checking very closely these CGBs, and this reports, according to our sources, of that China is going to start issuing some of these ultra-long bonds starting on Friday. This is according to sources, mind you, right now, but it's 1 trillion RMB basically worth when it comes to 20-year or onwards or so. So certainly that's going to be one thing to watch here about what this means when it comes to the credit cycle of China. Obviously, we talked about how this was one of the reasons why we saw such a big miss in the credit data in April as well. Is this going to make up for it? It's a key question economists are asking as well. Watching some of these water stocks in particular. So apparently there's been some price hikes, reports of that in cities like Guangzhou. So that's why we're seeing some of these water stocks are up here this morning. And we're watching the strategic partnership in the tech space in China. So JD.com and Xiaomi, they've signed this agreement to deepen their cooperation. Xiaomi saying they're aiming to reach sales target of 200 billion renminbi in the next 3 years through JD's sales channels here. So it could be everything from retail, logistics, tech, finance, and other fields that they could be cooperating on. Not a whole lot of movement in those stocks, but keep in mind, JD does report earnings on Thursday.
Yep, along with, the whole gamut of Chinese tech firms, of course, Tencent, Baidu, Baba, Meituan, all coming out with earnings. In fact, we'll get you guys a preview of all those numbers coming through on the other side of this break. All that being said, markets are off to a slow, quiet, and fairly mundane start here to Monday, 0.1% to the upside. We're headed into the Japanese lunch break. Plenty more ahead. This is Bloomberg. All right, welcome back to shows. Here's a way to spin Monday, the first lunch break of the week. There we go. Across markets in Tokyo, Nikkei 225 is not doing anything out of the gates here. A couple of big movers in that market. SoftBank was moving earlier on. Some news, by the way, in case you missed it out of BOJ. Let me just bring up my screens right now. So in terms, about 90 minutes back, bond futures came under a bit of pressure. The yen was bid after the BOJ bought smaller amounts of bonds today than the previous operation, perhaps opening the door there a little bit more for yields to push up a little bit further. Things did go the opposite way, though. I should mention that 94.94% now on your Japanese 10-year yield. That exchange rate will be at the mercy of the U.S. inflation print, which comes out on Wednesday. So keep an eye on that, among other things, of course, to keep an eye on.
Yep, in terms of the rest of the region, we talked about how slow going things are looking here right now, but we're slightly basically flat in Japan, and that's really not doing much when it comes to the broader region as well. We're basically just slow going. U.S. futures aren't doing much. Dollar's slightly to the upside here as well, and it's a mixed picture across sector by sector. There's things like the weaker demand picture out of China when it comes to credit, this threat of EV tariffs. I mean, that certainly might be weighing on a little bit, especially in the greater China markets here today. But of course, we're watching very closely Japan. So we talked about the BOJ story. There's also earnings coming up as well. SoftBank could be a pretty interesting one. Yeah, out with earnings. We talked about this. In fact, expected to see a return to profit after the shift to AI and chips. Of course, the Vision Fund didn't work out perfectly, is a diplomatic way to say that. Min Jong Lee, our tech reporter, joins us online out of Tokyo to talk. Min Jong, let's start with the full-year results shaping up. Just your thoughts on that, what to expect and what we're watching.
Yeah. So hopefully we will see sort of positive move toward earnings in terms of annual. We are expecting a SoftBank Group to report much narrower losses, still in loss, but much narrower than the previous year, thanks to a comeback in technology valuations across the globe. And this has also helped the Vision Fund startups recoup some losses with the recovery in valuations. And for the group, there was a pretty big one-time gain from their T-Mobile stock options arrangement. But overall, hopefully, yes, looking a little bit positive than before.
Dave mentioned the Vision Fund. They've been actually selling assets. What does that mean for SoftBank?
Yeah, so they have been selling down a lot of its publicly held assets. We analyzed the filings of its U.S. listed assets, and its tells us that the total value of those assets have been reduced by about $29 billion over the course of 2 years. And this share price declines have impacted the value drop, but it also has a lot to do with Vision Fund actively kind of offloading quite a bit of shares like key assets, including Coupang, DoorDash. This indicates a shift in focus for Masayoshi Son, who is paying more and more attention to new areas that have greater emphasis on AI and chip technologies. And these new strategic investments are being executed more for the group side and less for the Vision Fund. So it'll be interesting to see how much more development we see in that side.
All right, Mingjung, thank you for that preview there. Our tech reporter, Mingjung Lee, joining us out of Tokyo here this morning. Of course, you can turn to your Bloomberg for more on this. T-Live Go is going to be opening up soon to get commentary analysis from our expert editors that are tracking all things SoftBank this morning.
Yeah, speaking of earnings, so just, I guess, the agenda of this week and the big names coming through and when they're coming through as well. So, I mean, take your pick, right? Take your big large cap tip. Mizuho's coming out. That's Japan. Sony, SoftBank. We talked about that. So as far as China goes, you have Baidu, you have Tencent on your screens, Jingdong, Baba, and Meituan to add to that as well. Okay, let's have a look at earnings expectations, so projections, right? So 12-month earnings expectations. When you look at the reason why tech's very much important this week, tech has led the rally, and we're seeing guidance coming out of these companies, and we'll see whether or not analysts will get further reason to bump their projections up on a 12-month basis. And as you can see, this sector has really stood out compared to the broader benchmark on your screens.
Yeah, and if you take a look at what our big take is here this morning, a great story out, just really talking about those trade lines being formed and hardened in some ways here. Superpowers are basically led by the U.S. and the European Union have funneled nearly $81 billion into producing the next generation of semiconductors. And it really escalates a global showdown with China for chip supremacy. Let's bring in our U.S. industrial policy reporter, Mackenzie Hawkins. She has more on today's big take, and she's here in Hong Kong. It's great to see you here. It's great to meet you, Mackenzie. Great piece. Just highlight what this all means, this surge in domestic spending that we're seeing in the U.S.
So, chips have been, they're one of the main topics of the kind of global geopolitical technology struggle since the pandemic, when we had a shortage of chips that, put supply lines on halt for things like autos, phones, consumer electronics. And we've seen governments across the world pour billions and billions of dollars into trying to make more chips on their soil because of worries about an overconcentration in East Asia. The U.S. is leading this push. The European Union, governments from South Korea to India to Taiwan to Japan are getting in on the chips game. But all of this is kind of to catch up with China's decades of industrial policy in the sector. So all of this spending by U.S. and its allies really pales into comparison to what you see Beijing pouring into semiconductor technology.
Yeah, and I guess it begs the question, should we expect the same magnitude of spending to continue in the U.S.? And certainly the conversation we're having all the time here is, what China's been doing, to your point, industrial policy, and what I guess other places in the Asia-Pacific are doing, South Korea perhaps being one of them. Just try to extrapolate for us what that spending might look like in the U.S. in the years to come.
So the U.S. has set aside $52 billion for chips. This is the largest industrial policy effort that we've seen in the country in more than a generation, really since World War II. And there's a question about whether it's going to be a one-and-done situation or we might see a so-called CHIPS Act 2. Intel CEO Pat Gelsinger, the day before Intel received the biggest award from the CHIPS Act, $8.5 billion in grants plus $11 billion in loans, said, we're actually going to need more. But U.S. voters and the lawmakers who supported this bipartisan piece of legislation in the first place want to see results before I think anybody would consider endeavoring on a similar effort. We are starting to see some results, though. The U.S. is the only country in the world to have won investments from all 5 of the world's top chip makers. And if all of them pan out, we could see nearly 30% of advanced logic chips made in the U.S. by 2032.
And people debate about this all the time, of just how advanced is this U.S. technology when it comes to AI and the design of these chips. Is it a wide gap still with China, or do you think it's actually narrowing now?
So China is still several generations behind the U.S. and its allies. What's important to remember is the U.S. right now produces 0% of these advanced chips. They're actually pretty much all made in Taiwan. Yeah. But TSMC is building 3 factories in Arizona. They will produce their most cutting-edge chips. There are still a couple of years after those chips come online in Taiwan. China, meanwhile, broke through with 7 nanometers, so a couple of generations behind the cutting-edge 2 nanometers or 1.8 nanometer technology in this Mate 60 phone that debuted in August. That really caught Washington by surprise. You know, the U.S. had been trying to keep China from getting to that advanced chip technology level with export controls, saying you're not allowed to buy the most advanced chips or the most advanced chip-making tools from the U.S. or the allies that Washington has managed to get on board with some of those restrictions.
Yeah. When we opened that phone, lo and behold, the 7 nanometer chip, as you were pointing out. Fantastic big take here, by the way. So for our viewers and clients, do check that out on your Bloomberg. Our U.S. industrial policy reporter, Mackenzie Hawkins. Right. For more on the state, of course, of U.S. and China relations and a lot of these overcapacity conversations, U.S. Treasury Secretary Janet Yellen, there we go. She'll be speaking exclusively with Bloomberg TV and radio. That takes place at those times later on Monday.
Yep, and you take a look at what really people are thinking when they look at tech now, right? You know, is it more a bet on just innovation? Why are there still so much interest in it? And it's interesting, these results that we get from this Bloomberg Markets Live Pulse survey, is that it's actually almost serving as a haven and almost like an inflation hedge. We asked that question to a lot of our people that took this survey of basically what is your still haven of choice here right now? Is it the likes of the dollar, the Swiss, and the yen? Well, the dollar is still very much in terms of a haven currency, so the yen definitely diminishing on that front as well. And really, you know, what else are we looking at? I mean, tech seems to be is even beating the likes of gold in some ways as a better way to safeguard against inflation.
Yeah, I mean, if it continues to return and just performance alone, just on the Mag 7, right? If it continues to do this way, it has not just been a hedge on inflation. It's actually outpaced and offset any sort of pain from inflation that you would have taken. And the fact that, you know, again, we're talking about NVIDIA here. You know, the headline is NVIDIA rivals gold as a shield against inflation. The fact that this earnings report is 2 weeks away and we're talking about it at this point in time just underscores how important this stock is really to this global bull market, at least the U.S. bull market.
I mean, bear in mind, there's still an alarm. People say no, you can't use large cap U.S. exports as an effective recession hedge as well. But you are seeing gold take still the first seat, and then maybe these U.S. tech giants are following, and you know, definitely beating other asset classes, even Bitcoin.
5% only.
Yeah. Okay, we got plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. So we've actually learned that Beijing plans to start the sale of these ultra-long special central bank, central government bonds on Friday. Conversations, in fact, took place with some of the dealers early this morning. Let's bring in James Mager, our China economy editor, to just get us up to speed, James, and what we know in particular about the sale, and maybe if you know the breakdown of also the sort of tenors we're talking about that might hit this market on Friday.
So we're looking at about $1 trillion yuan worth of bonds. It's broken down into 20-year bonds, 30-year bonds, and then about 100 billion yuan of 50-year bonds, which is, I think, the longest government bond that has been issued by the government here. And what these are announced, in the budget and in March, and this is basically meant to provide money for the central government that it can then use to support spending by local provinces and local governments across the country. The need for this, I think, was shown. The need for these new bonds was really shown by the credit data we saw over the weekend, where you saw government bond issuance fall for the first time. The second time since 2017. You saw a big slump in borrowing by households and by companies, and so the total credit data, total credit issuance in April was actually negative for the first time since 2005. So, basically there isn't any demand for credit right now in the economy. April is very weak. And so these bonds that the government is going to, this money, the government is going to borrow by selling these bonds is meant to make up for the slump in mortgages because of the housing crisis, the slump in demand from companies for loans because the economy is weaker.
Right. So can we expect then that the credit data, I mean, in May and June can actually expand from here? I mean, was April going to look more like an anomaly now that we have this announcement?
I think it will. I mean, obviously, the government bond portion of that was probably going to look a little bit better, but you did see a 98 billion yuan fall in the amount of government bonds that were sold in April, and so there has to be these bonds have to be sold pretty quickly now to really boost that to fill in that hole that we saw. But it's not going to fill in the hole that you're seeing in the lending data. I mean, if people aren't willing to borrow for mortgages, household borrowing is still going to be weak. If companies aren't willing to borrow to invest, the company borrowing data is still going to be weak. So we may as well see a pickup in the government bond portion of the total social financing data when it comes out for May in early June, and then through July and through the rest of the year. But the other parts of the economy, the real economy, not just government spending, but private spending, household spending, all of those things are not going to be directly affected by these bond sales. And it really is going to take time for the government to sell the bonds, and then for them to spend the money on infrastructure and other projects, and then for that spending to filter through and actually try to boost demand. So, this is a good sign. The question is, like a lot of people have, is why did they wait so long to actually start selling these? But it's a good sign. But obviously, this kind of spending doesn't have an immediate multiplier.
Yeah.
Yeah, way to be seen. And while we, I guess, try and figure out the delta, the rate of improvement in the economy, James, just if you could set us up for the data that comes out this week, later on Friday, I believe, the activity numbers, just set the scene for us on what to expect from those numbers.
I think what we're expecting from those numbers is the industrial side of the economy will continue to be doing okay. We saw export data in April was pretty strong. I mean, part of that is a price effect. Your prices have fallen, so actually exports are doing much stronger than they would have done. They did last year, but that's being undercut a little bit because prices have fallen so much. So I think the industrial side of the economy, the export side of the economy, will continue to do better. Whether the retail side of the economy also continues to improve or not, I think is the really big question. We did see better household spending over the holiday period on services and things like that, but there wasn't really a massive increase in how much people were spending. The per capita spending over the holidays was down. It was just that more people went out and spent. So I think here you're still looking at that, still continue to see that two-track kind of economy that we've seen for a long while now in China, where industrial is good or industrial is better and household is worse.
Yeah. James, thank you. James Mager there, our China economy editor, with the latest on that. We got plenty more ahead. This is Bloomberg.
Welcome back to watching the China Show. Here are some geopolitical stories that we're following right now. The Philippines says China has deployed vessels and divers to explore a shoal in the South China Sea for reclamation. The nation's Coast Guard says it sent a patrol ship to what Manila calls Escoda Shoal to deter some of these activities from the Chinese. Now, the area is close to Palawan Island, of course, that's in the Philippines, which directly faces the contested waters. The development adds to growing tensions between Manila and Beijing. Now, Russian President Vladimir Putin has replaced his long-serving defense minister in what was really a surprise move. Sergei Shoigu had been in the post since 2012. Now, the reshuffle is the first major shakeup of the Kremlin's military leadership since the Ukraine invasion, and comes as Russian forces seek to capitalize on a battlefield advantage in that war. Now, the U.S. says Israel risks fueling a post-war insurgency in Gaza, with thousands of armed militants remaining in the territory, even if Israeli forces invade Rafah. Israel says that it has now evacuated the eastern third of the city as it prepares to expand its military operation. Last week, the U.S. said it would withhold weapons that may be used in Rafah, and cited evidence that Israel had breached international laws protecting civilians.
All right, let's take a look at your China brief this morning. A look at what's making headlines in national newspapers. The Security Times quoting housing industry insiders predicting further easing of restrictions on property purchases. It also cites analysts who say Beijing may set up a platform to consolidate housing inventories. That's why we're seeing a lot of these property stocks really flourish here. Some of China's major cities did scrap home buying curbs last week in a bid to revive demand. And the Securities Journal also seeing that credit growth is stabilizing as government bond issuance speeds up. On the back of that breaking news that we just brought to you, it also predicts real lending rates dropping further on expectation of a modest rebound in inflation. And there's been some commentary in the Economic Daily saying that officials should deploy policy tools, including ultra long-term special government bonds, to help build up security capabilities in key areas. Very timely today.
Yeah, guess what? Breaking news could come on Friday. A lot of these. Okay, so from tomorrow, by the way, public service announcements. You can tune in to Tiger Money, a Bloomberg podcast co-hosted by myself and Bloomberg Intelligence ETF expert Rebecca Sinser. We'll be chatting and really taking you into the deep waters of investing and getting career advice from some high-profile guests. Tune in every second Tuesday. You can find that on Apple, Spotify, YouTube, and also Bloomberg.com. So if you like what you hear but hate what you see, this is the audio version of me.
Another version. If you want more of David, not one or the other. Come on. Yeah, right?
I can't have more. I'm kind of sick and tired of myself.
What guest are you? What's the first guest, you know?
Well, so tomorrow the one that drops is the BlackRock head of the region.
Great.
Susan Chan. So she has some interesting takes. And by the way, you want to hear, if you're long Japan, and if you want to gain more exposure to private markets, if you've had it with these public markets, those are two big priorities for them this year. Plus, of course, there's many others that, of course, I'm not going to spill the secret sauce.
Give some hints. Sprinkle some teases there. You know, just want to help your podcast.
There we go.
All right, take a look at markets here right now. We're watching very closely some of these chip stocks as well. Of course, TSMC with a jump in those April sales. That certainly did suggest that this AI demand is still very much there. There's also a dividend hike as well, so that was a bit of a surprise. So another catalyst for the stock here. We're up some 2% on the TAIEX here. Watching HS Tech. So in the last, let's say, 15, 20 minutes or so, there's been quite a bit of reversal. Take a look at that. HS Tech is now up some 1%. It's helping reverse some of the losses on the Hang Seng. In fact, we are now in the green right now in Hong Kong. Not sure what's sparking it, but certainly there's a lot of tech earnings on tap here. Take a look at what's really in store. So Alibaba, Tencent, Meituan, Tencent Music reports, I believe, today first. But yeah, this is really what's driving it, right? Take a look at that. Alibaba's up about 3.5%.
There we go. So we're up now 3 straight days on the Hang Seng Tech Index, which now puts us back. In fact, I'm looking at just some of the weeklies right now. So we did take a bit of a break last week in terms of technicals, HS Tech Index. We're looking at, so at 4,000, this is actually a key level that we haven't managed to break sustainably on this specific index. So this probably gets us well underway, but it depends on what these companies report and what they say about what's ahead. And as Yvonne is pointing out, of course, Tencent Music reports today to just get us started. Okay, we're looking at some of the banks as well and some of the earnings coming through. There we go. So Baidu, Baba, JD.com, and Tencent, just some of the big companies reporting this week. A lot of in Japan, of course, as well. Rakuten, and also some of the big Japanese banks reporting as well. So yeah, conversations around really how this higher rate environment in Japan has benefited, question mark, some of the net interest margins there in Japan?
Yeah. It'll be interesting. Sonal Desai was just saying earlier on that, the BOJ is going to probably have to hike a few times this year as well. That's why we'll take a look at these markets. Your global macro moves isn't really telling much. I mean, it's basically just a mixed picture across the board, but equities are slightly doing a little bit better, mostly higher here. The dollar is a bit firmer across Asia FX here this morning. And yeah, you're watching some of these sovereign yields picking up just a little bit. Japan in particular, given that breaking news of BOJ buying less bonds than expected here today as well. That's it for us here in the China Show. Bloomberg Markets Asia is next.